An investor is planning for his retirement 25 years from now and wants to ensure his savings outpace inflation. Which asset class should he prioritize? Here are your options. A. Fixed deposits with high interest rates. B. Corporate bonds with AAA rating. C. Equities with long-term growth potential. Or D. Gold and other precious metals. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Equities have historically provided inflation-beating returns over the long term, unlike fixed deposits and bonds, which may not always keep pace with inflation. A new investor believes that since a stock has performed well in the past 5 years, it will continue to rise indefinitely. Which behavioral bias is influencing his decision? Here are your options. A. Herd mentality. B. Recency bias. C. Overconfidence. Or D. Loss aversion. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Recency bias causes investors to give undue weight to recent events and assume past trends will continue in the future. Which of the following statements about asset allocation is correct? Here are your options. A. Tactical asset allocation remains unchanged over time. B. Strategic asset allocation adjusts based on short-term market fluctuations. C. Tactical asset allocation seeks to take advantage of temporary market inefficiencies. Or D. Strategic asset allocation ignores an investor's financial goals. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Tactical asset allocation involves adjusting the portfolio to capitalize on market opportunities, unlike strategic asset allocation, which is goal-driven and stable over time. Which of the following situations demonstrates credit risk? Here are your options. A. An investor sells stocks at a loss due to market downturns. B. A company fails to pay interest on its issued bonds. C. The price of a government bond fluctuates due to changes in interest rates. Or D. An investor faces difficulty selling their property due to lack of demand. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Credit risk is the possibility that the issuer of a bond or loan will default on its payments. An investor buys a long-term bond today, expecting interest rates to fall in the future. What is the rationale behind this decision? Here are your options. A. Bond yields will increase as rates fall. B. The bond will become more liquid in the market. C. The bond will generate higher periodic income. Or D. The bond's price will increase as rates fall. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Bond prices and interest rates are inversely related. When rates fall, existing bonds with higher fixed rates become more valuable. Why is a self-occupied residential property usually not considered an investment? Here are your options. A. It does not generate rental income. B. It is highly liquid and easily sold. C. It appreciates in value over time. Or D. It is protected from market risks. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. An investment is expected to generate returns, whereas a self-occupied property does not provide income unless rented out. A financial advisor recommends that a client include international stocks in their portfolio. What is the primary reason for this suggestion? Here are your options. A. To avoid currency risk. B. To increase exposure to local economic trends. C. To reduce country-specific market risks through diversification. Or D. To ensure returns are guaranteed. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Investing in international assets helps diversify risk and protect against domestic market downturns. How does inflation affect an investor planning for a financial goal 15 years away? Here are your options. A. The required amount will increase due to rising prices. B. The required amount will decrease over time. C. The purchasing power of the required amount will remain the same. Or D. The impact of inflation is irrelevant for long-term planning. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Inflation erodes purchasing power, requiring a larger sum in the future to meet the same financial goal. Which investment avenue allows investors to directly participate in ownership of a business? Here are your options. A. Fixed deposits. B. Bonds. C. Equity shares. Or D. Gold ETFs. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Equity shareholders are part owners of a company and share in its profits and risks. If an investor prefers low risk but requires liquidity, which option is more suitable? Here are your options. A. Fixed deposits with 5-year maturity. B. Government bonds with a lock-in period. C. Real estate. Or D. Liquid mutual funds. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. Liquid mutual funds provide easy access to cash while maintaining lower risk compared to other investment options. A retiree wants a stable income with minimal risk. Which of the following investment options is least suitable? Here are your options. A. Government-backed pension schemes. B. Corporate bonds with AAA rating. C. Equity mutual funds. Or D. Post office monthly income scheme. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Equity mutual funds are volatile and may not provide stable returns suitable for retirees. An investor does not sell a declining stock because they don't want to realize a loss. This is an example of. Here are your options. A. Confirmation bias. B. Overconfidence. C. Herd mentality. Or D. Loss aversion. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. Loss aversion causes investors to avoid realizing losses, even when selling might be the rational choice. Which of the following factors is most crucial when evaluating the safety of an investment? Here are your options. A. Historical returns of the asset. B. Tax benefits associated with the asset. C. Creditworthiness of the issuer. Or D. Liquidity of the asset. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. The safety of an investment largely depends on the creditworthiness of the entity issuing it. Why is rebalancing important in portfolio management? Here are your options. A. It maintains the intended risk-return profile of the portfolio. B. It allows investors to time the market accurately. C. It ensures all asset classes are equally weighted. Or D. It guarantees higher returns. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Rebalancing prevents deviation from the original asset allocation, keeping the portfolio aligned with financial goals. A financial planner divides a client's portfolio into short-term, medium-term, and long-term goals. Which investment principle is being followed? Here are your options. A. Strategic asset allocation. B. Tactical asset allocation. C. Risk profiling. Or D. Behavioral biases. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Risk profiling helps in choosing investments that align with an investor's risk tolerance and time horizon. Which of the following scenarios demonstrates liquidity risk? Here are your options. A. A bond's price falls due to rising interest rates. B. An investor is unable to sell a property quickly at a fair price. C. A company defaults on its bond payment. Or D. A stock's price fluctuates due to market sentiment. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Liquidity risk arises when an asset cannot be sold quickly without a significant loss. Which type of risk affects all investments in an economy due to macroeconomic changes? Here are your options. A. Credit risk. B. Liquidity risk. C. Market risk. Or D. Company-specific risk. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Market risk arises from broad economic factors affecting all investments. Which of the following is an example of behavioral bias affecting investment decisions? Here are your options. A. Choosing bonds over stocks for safety. B. Selling stocks after a market crash due to fear. C. Allocating investments based on financial goals. Or D. Investing in mutual funds for professional management. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Emotional decision-making, such as panic selling in a downturn, is an example of behavioral bias. Which investment option provides periodic interest payments but does not offer ownership in a company? Here are your options. A. Bonds. B. Stocks. C. Mutual funds. Or D. Real estate. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Bonds provide interest payments but do not grant ownership like stocks. A mutual fund distributor must evaluate an investor's risk-taking capacity before recommending a scheme. This process is known as. Here are your options. A. Asset allocation. B. Risk profiling. C. Investment diversification. Or D. Portfolio rebalancing. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Risk profiling helps assess an investor's ability, willingness, and need to take risks before recommending investments.